Hello and welcome to Trading 5 Talents. In today's video, I'm going to be giving my week 5 update on the OptionSellerROI.com's options screener for selling cash secured puts and covered calls, as well as my final verdict of how this service has performed over the past 5 weeks and whether or not I would recommend it. So this is all personal opinion, but if you want to see how the previous 4 weeks performed, I have all of those videos on my channel as well. So let's get into week number 5. All right, week number 5 for cash secured puts, the week of 4/25. There were only 2 that came up on the screener after I put my filters in. And if you remember, these are my filters down here. I covered that in a previous video, so I won't do that here. But 2 of them came up, BBBY, which it was pointed out to me last week that I kept saying BlackBerry. That is not BlackBerry, that is Bed Bath & Beyond, so I apologize for that. But BBBY and MARA are 2 puts that were recommended. You can see BBBY opened at $16.82, and then it was recommended to sell a put at $15.50. MARA, it opened at $18.06, and then the put was recommended at $16. Over the week, like everything in the stock market again, was just very red throughout the week, and both of these would have been assigned. You can see they were not listed as winners, and that means that the closing prices were actually lower than the put prices that were sold. For example, on BBBY, it closed at $13.71, but we sold the $15.50 put, so that means we had to purchase the shares at $15.50. So if you had to buy the shares at $15.50, but now they're $13.71, you're almost down $200 in unrealized losses. And you got $44 in premium, but you're still down quite a bit. So $15.79 was the close price for MARA, but you were forced to buy them at $16. So this one isn't too bad. You could turn around and sell a call for the next week to complete the wheel. So let's see what the call prices are at. All right, so if we look for MARA, we go here and trade options, and we want to look at May 6th, and we want to sell a call. So if we were assigned at $16 and we had to purchase the shares at $16, we could sell the $16 covered call right here. So we would sell the call up here, and then we tap on the $16, and you can see right now, let me go down. You can see right now it's at $1.18, but that was as of close on Friday. It's going to open up differently on Monday. So if we look at the theta decay, you can see it's negative 0.1088. So that means if all else stays equal, it would lose about 10 cents, or let's just say 11 cents per day. So 11 cents on Saturday, 11 cents on Sunday. So that's 22 cents. So if it is right now, the premium is right now $1.18, and it lost 22 cents by Monday open. Again, that's provided no gap up or gap downs or anything like that. Then we could sell this for about $1 or about $100 in terms of premium. So that's a pretty good one. If you were assigned MARA at $16, you could make some nice premium on the covered call. Now let's look at the calls for this week. All right, 4/25 is the date. This was last Monday, and these are the covered call recommendations from OptionSellerROI.com. So once again, you have BBBY and you have MARA. You also have AMC, RBLX, PTON, PLTR, DN, DKNG, and RIOT. There were only 8 that came up on this screen, again, using these filter options for the website. So only 8 came up. Now let's look at how these performed. For example, BBBY, if you would have purchased at $16.82, and I'm assuming if you're doing this, you're purchasing at all of these open prices on Monday. You purchase at $16.82 and you sell the covered call for $17.50. But we know what happened to BBBY. It went down and closed at $13.71. So of course, this call would have expired worthless. You would have kept your full premium of $75. And in fact, all of these expired worthless. So none of these covered calls were assigned. And in a red market selling covered calls, usually this is what happens. So each of these had really great ROIs based on the amount of capital you put in. But again, once you sell a covered call, once you buy these stocks and sell a covered call and it expires worthless because the stock just tanks, like so many stocks did this week, then you are left bag holding these shares. So that is a disadvantage to the covered call strategy or the buy right strategy. And again, I have a video on how this can be at least alleviated, if not remedied. And I'll put a link at the top of this video for those recommendations. Right, so some of these other ones, we're not going to go through every single one, but you can see that when these shares are purchased, it looks like most of them are just being sold maybe a strike above or 2 strikes above where you entered at. So 33.95 to 35.20, 18 up to 21. All of these would have made money. So yes, you may have been bag holding some shares that are far below what you purchased them at, but at least all of the premiums were kept. So 8 out of 8, I guess you could call winners if you assume that keeping your shares was the intent of this strategy. So those would be considered winners. So let's take a look now at the summary of the past 5 weeks and any other notes that I might have on this website service. All right, so the 5-week period win rate for puts: week 1, 2 out of 3, week 2, 0, week 3, 2 out of 2, week 4, 0, week 5, 0. So in a red week, selling puts can be pretty dangerous because the stocks keep going down. There doesn't seem to be a bottom quite yet. I don't know when that bottom will occur. So every time you sell these puts, you risk getting a sign down at your short put strike. So with the market continually going down, this becomes really risky because the stock keeps going way past your short put strike. And now you're assigned at a strike price that is higher than where the current market is at. So now you're left bag holding. So with cash secured puts this week, at least with these recommendations using this service, it didn't perform too well. The total was only 4 out of 9, so 44.4% win rate. Now on the call side, we would expect something completely different because if the puts aren't performing well, you would expect the calls to perform well. So week 1, 6 out of 10, week 2, 100%, week 3, 90%, week 4, 80%, week 5, 100%. So this is a lot better. 48 trades would have been made. 41 would have been, quote, winners just because you were not assigned the call, so you kept your shares. So that's a 85.4% win rate. And again, this is probably what we would expect with these markets continually going down over the past 5 weeks. The calls are expiring worthless because those stock prices are not reaching that strike price of the covered call. But because the stocks are continually moving in a downward fashion, those short puts are being assigned, which is why you have a lower win rate on the put side and a higher win rate on the call side. So here are the put filters that I found work the best for me using the Option Seller ROI website. So that filter list contains all lists. I'm not selecting for a specific list, but all of them. 10 to 25% moneyness, 100 minimum open interest, which was the default, 7 DTE. Now, the reason I'm doing this is because, first of all, I like weekly options. The second is because I wanted to have a head-to-head comparison with the weekly options list service. So I just wanted the weekly options that were available. Greater than 2% ROI, greater than negative 0.3 delta, which again puts this at about a 70% chance of profit at the time the screen is run. I'm sorting by strike price because it was just easier for me to pick those plays that had a $50 or less strike price, so that would mimic a $5,000 working capital. And then a greater than $25 premium. So again, less than $50 strike price. So I don't want to do anything if earnings are that weak just because of the wild swings that could occur. So I want to make sure that that variable is removed. I don't trade this strategy using volatility products or leveraged products. So for the call filters, this is what I found works best for me. Again, using all list, 100 minimum open interest. Again, that's the default, 7 DTE max, greater than 2% ROI. And then now I'm sorting by the ROI. So I'm getting the best, most profitable trade using this list, greater than $25 premium, and of course, less than $50 strike, so that I can mimic the $5,000 working capital for that week. No earnings, no volatility products, no leverage products. With those filters in mind, using OptionSellerROI.com's service, would I recommend it? Now, the short answer is yes. Of course, I recommend it because I've been using this website for a lot of other calls, and I made, personally, just $117 in total, just using covered calls. I think it was Nikola. I did it 3 times, maybe 4 times, and that totaled $117 in covered calls. But the reason I like this list is because it's not a static list. I was able to use the list to get a play on SST, using a buy right strategy, or buying the stock and then writing a covered call. And from that, I made $696.34. And it was all based on the recommendation from optionsellerroi.com. And I have a video on that if you want to see how I made that play. And unfortunately, SST has really tanked since I exited. And I'm sorry for those that are still in it. Hopefully it rises back up, or at least you can make your money back on selling covered calls in case you are holding that stock. I did make a lot of money on this in this past 5 weeks. So taken together, that's just over $800 that I've made in the past 5 weeks using this service. And of course, I've used it previously, so I've made money before. Now, there are two great advantages that I see with optionsellerroi.com. First of all, and probably the best thing, is that it's free. You can just go to the website, link is down in the description, and then you can just use the screener as I've been using the screener these past 5 weeks and showing you on these videos. Now, if you want to, you can go ahead and join as a patron. There is a link on his website. You can support the website. And you do get a few other advantages. I think there's an options tracker. There's a custom list that you can set your symbols to if you like to trade the same tickers over and over. And, there's some posts that he also puts up. But overall, it's a free website. So I encourage you, check it out, try it, see how it works for you. Paper trade some of these like I've been doing just to see how the website performs in your hands with your strategy, with your risk tolerance. But also go over to Twitter and then give the developer a follow if you're on that service. Link is down in the description to his profile as well. The second great advantage that I see is that you can run the screen at any time. Again, this is not a static screener. So it updates, every 15 to 20 minutes, as long as you run that screen, push refresh, and a new list of tickers based on that screen. So you can run it, really anytime that you want to. What I've been doing for these past 5 weeks is just running it on the weekend because I wanted to compare it to the weekly options list service. But if I were to do it on my own again, I wouldn't run it on the weekend because I would want as close to real-time data as possible. And then I would do it, Monday at open. But if you don't want to trade weeklies, then you can set your DTE max to something greater and you can trade monthlies, or you can trade 2 weeks out. But that's what's great about this service, is that it's free and you can run it exactly how you want to for any time frame that you want to. So here are my suggestions. Check the list Monday after open. That way you're getting the freshest data. Now, because there is that lag period, you want to make sure that you're not running it right at market open, because it's still going to be based on closing prices from the Friday previous. So you want to do it after the delayed data has come in. So maybe 9:45 a.m. Eastern or 9:50 Eastern, or just, make it easy, just 10 o'clock Eastern time on Monday, and then you'll get the freshest open data. The other suggestion, and I've made the suggestion before with all of my trades, is that exit early. You don't have to wait until expiration to collect all your premium. You can close early. So if you're selling a covered call, you're selling a cash secured put, then simply buy to close for anywhere from 50 to 90% of your max profit. Yes, you're leaving a few dollars on the table, but what I think you're leaving on the table, you can more than gain back by entering a new trade for the following week or the following expiration, because you'll be able to take advantage of more theta decay. For these reviews, I've let them go to expiration because I think that's how they were intended. But normally in my trading strategy, I don't, because I want to take advantage of that theta decay and I want to lock in my profits and protect my collateral as much as possible. It doesn't always work that way, but that's what I like to do. So if you want to see how the past weeks have performed, again, there are several videos on my channel. You can see how each of these services have performed. If you have any questions about my recommendations about optionsellerroi.com, leave a comment down below or catch me on Twitter at Trading5Talents. If you want to continue to learn more about the wheel strategy and selling options in general, then go ahead and click on the subscribe button, turn on the notifications so you can catch all of the updates. Until next time, trade wisely and take care.